With the ongoing speculation regarding the possibility of a rate cut by the Federal Reserve, Fed, later this year, US dollar and US bond yields show considerable downside pressure against major currencies. Based on data from the CME Group's FedWatch tool, the likelihood of a rate cut by the Federal Reserve at its meeting on May 1st is approximately 40%. In contrast, the probability of such an action in June is nearly 50%. President Christine Lagarde of the European Central Bank, ECB, underscored the significance of the forward-looking indicator. The Governing Council of the European Central Bank, ECB, maintains its determination to guide the economy toward attaining a sustainable inflation target of 2%. Lagarde additionally stated that the ECB will adhere to a data-centric approach when making decisions. Conversely, the recent estimate for the growth of the Eurozone's gross domestic product, GDP, in 2024 came from 1.2% in November to 0.8%, with an anticipated growth rate 2025 of 1.5%. In addition, the Commission projects a decline in inflation within the Eurozone, with an estimated decrease from 5.4% in 2023 to 2.7% in 2024. A sell-side liquidity sweep from the 1.07 support line showed buyers' activity in the market within the descending channel. In that case, a valid channel breakout with a daily candle above the dynamic 20-day EMA could be a highly probable long opportunity. Investors should monitor how the price reacts to the dynamic 20-day EMA. A daily candle above the 1.0806 level could extend the momentum toward the 1.09 psychological level. However, a failure to hold the price at the 1.07 level could be an alarming sign to bulls, lowering the price towards the 1.05 level.